Hello, this is Jordan, and this is your precious metals video market update for Tuesday, January 6, 2015. And just two charts for you today. In this first chart, this has not updated yet. This is as of yesterday, but gold is up to 1218, which is that first red down trend line where you can see the resistance is just above 1200. So it appears that gold has rallied up to that point. And that's the short-term situation. If gold continues higher in the coming days, it would break above that trend line. And then the next target would become that confluence of resistance you see there around the 1270 to 1280 area. Now let's step back, and in this chart we have the 300-day exponential moving average, and I've highlighted where that average is showing support and resistance. You can see with the arrows. So that did provide resistance in March and July, and also there is a trend line which goes back to May 2013. And so the trend line and the moving average are pretty much sloping in the same fashion to the same target area, although the exponential moving average is a little bit lower. That's at 1277, where if we look at the trend line in the next month or two, that's a little bit higher. But essentially that's what we're seeing for gold, that there's a major confluence of resistance in the 1270 to 1280 area, and that appears to be a strong target. And if gold can continue to advance in the coming days and break above that first little resistance, then that's where I would expect it to go, to 1270 to 1280. And that's the level that really needs to be taken out to confirm that we have seen a major bottom and that a new bull market is in effect. Now the next chart, we're looking at how gold is performing relative to other markets and other asset classes. And yesterday, gold broke out to a 16-month high against the foreign currency basket, and the same thing if you're just charting gold against the euro. And gold against the British pound has just moved above its 200-day moving average. It's kind of been battling with that at times over the last year. Gold, of course, has been showing a lot of strength against the yen, and so now it's very strong against most currencies except the dollar. But that's a very good sign looking at that chart. Now the second one, gold against commodities, that has been very strong, and again yesterday that broke out to a 17-month high. Now where gold really needs to show more strength in relative terms is against stocks, because as we know, stocks have been a very strong bull market. Look at gold against global stocks. That's the MS World Index, which excludes the US. That has not broken out yet. And gold against the S&P 500, that has been a one-way ride essentially since 2011, and it's really had very few or very weak rallies in the last year or so. So those are two charts to really keep an eye on, especially if gold is able to continue to advance and break that first resistance. And it looks like it could possibly get up to 1270 to 1280, and so we want to see what does that mean for gold's relationship against stocks. Will it have a very strong move and break above these resistance lines? Well, only time will tell. And in addition to that, as we discussed last week, another thing to focus on is we'd like to see silver lead gold and outperform gold. So these are some relationships to keep an eye on. That's all for today. If you want to find out more about my work, you can visit thedailygold.com. I have a free newsletter as well as a premium newsletter. Thank you everybody for listening and watching. I wish you all the best in 2015.